All right, welcome to another episode from the Chart Reader. So I've said it a couple times that there are things I want to talk about on YouTube. The viewership just isn't there, right? And at the end of the day, the algorithms are still my boss, right? Whatever viewer requests you guys give me, you're still my boss, right? You guys often call me sir. I swear, you are all the sirs and madams to me. You know what I mean? I appreciate everything you guys do and are here, okay? I want to talk about the markets today. I think it's an important thing to look at. We're actually on the weekly. Let me flash the daily like we normally do. The markets are looking scary. All right, I'm going to start with SPX. I'll also show SPY, the ETF of it. I will flash the NASDAQ and QQQ as well. And then maybe if there's time, I'll talk about Dow Jones. I feel like not a lot of people really care about Dow Jones, which is a little sad in my opinion, but I'll probably flash that chart as I'm talking about the other ones. But look, over moving averages is good for stocks and it's good for indices. Okay, when the SP 500 can get over all five, it flies. All right, now it's a lot slower and it's not, the biggest of things, but look at this. It rides the 8 and the 20 just like other things do, and then bad things happen under the 8 and 20, right? Like the same rules I say for like insignificant penny stocks is the same thing for a $4,000 indice. It's the same thing for a 30,000, oh, 13, wasn't it 30,000? What was 30? Is Dow Jones the 31? Wow, that's embarrassing. Dang, I went to the wrong one. Look at that. That's the 30,000. Same rules for a 30,000, 33,000 indice. All right. So, just that's the moral. But right now, scary things are happening. We are under 4 of the 5. There's a lot of things kind of saying, hey, we might be coming to the 5th one, right? And again, if you just saw it, Dow Jones is actually already under it. Dow Jones is under all 5 as of today. Okay, so there are reasons to be worried. The one thing I'm going to kind of highlight across all of them is the RSI. The RSI is low. Let me at least get that word out before I go to the next sentence. All right, the numbers are basically 80 to 30. If you're at the 30 number, that's kind of low and you should start heading up. When we're at sub 30 on an indice, that's a little alarming to say the least. All right, but I think I'm hoping to see a little bit of a recovery, but I'll give you all my thoughts and more shortly. But before we go any further, what are we going to do? Same thing we always do, right? We'll take a look at the daily and the weekly to see how these things are setting up short term. We have our 5 moving averages. There are horizontal support and resistance lines that I do draw manually myself. And then when we are done up here, we'll use the MACD, RSI, and volume as our lower indicators. Hey, really quickly, if you can please subscribe to the channel, share this video online with your friends, comment good or bad. Look, anything you can do helps me so much with these YouTube algorithms, but for real, just being here, giving me your time, it is super appreciated. All right, so let's get into it. And hey, this is kind of the first thing I want to start with. All right, the real popular thing to do is to act tough in a bad market. All right, we've all heard the quotes, when there's blood on the street, there's money in someone's pocket. We've all heard the buy the fear, stuff like that. Listen, end of the day, there are better market conditions to trade in, and then there are bad market conditions to trade in. And look, in this entire down, there were some big moments up, right? So the point really is, if you don't know what you're doing, all right, don't be one of those that pretends to not be afraid of it. Moving your money out of this market and just waiting patiently until things recover might be the smartest decision a lot of people can make. All right, but end of the day, I've said it a couple times. I probably need to say it more and stuff. But when the indices are bad, when the top 500 companies in the market are doing relatively bad, it's hard to find one insignificant one in the middle that's doing okay. All right, so that's really the moral of the story. All right, and look, they're doing bad. They are. We were doing really well riding the 8 and the 20 for a good amount of months. We definitely find the moment when we're under the 8 and the 20. We try to recover, trying, and definitely can't, right? We have now slipped under, like I said, 4 of the 5 and are seemingly coming here. MACD is seemingly diverging deeper and deeper into the negative, all right? I am shocked. And I'm zooming out hard just to kind of like make a point right now. And I mean, you can see it. There have been times when we've been lower. All right, we were at the 15. Well, it looks like it's 20 here. What are you right here? Let me not make assumptions on the numbers. This one was actually shit. Sorry, I'm like moving too much. Come on, baby, one more move. 17 right here. All right. Oh my gosh, I suck. Sorry about that. I'm like this one should be this one. Look at that RSI of a 15 on this day. What were you right here? 23. Okay, so these other ones are in the lower 20s, but yeah, it's relatively shocking to me to see that low in RSI, because the indices should be as textbook as things get. You get to a relatively high RSI, you come back down to a low one, you go back up, come down to a low one, you go back up. The fact that we've slipped below the 30s has me worried. Obviously, the fact that we've slipped below the 100 has me worried. I'm seeing a death cross right here. The 8 has now gone under the 100. That is a death cross in the moving average world. You know what I mean? So there's some bad things happening. Hopefully this 430 number, yeah, maybe this is where the line could have been. Again, I'm not going to adjust it. It's all good. But yeah, hopefully this little horizontal moment can protect us a little bit. Otherwise, yeah, it's hard to see a reason for this to not come to 4,200. You know what I mean? And again, there's a government shutdown looming in the air. That's a scary thing. It is. All right. Like if the government shuts down, it's hard to have confidence, you know, in other things, right? So the government buys a lot of stuff. All right, government contracts are worth hundreds of millions, if not billions, right? So a government shutdown actually means turning off substantial customers and turning off inflows of purchase orders, right? Like a government shutdown means a lot of stuff, okay? So there's a looming fear of that here, all right? Where are we on the weekly? Again, we were going well above the 8. We used the 20 right here. We have definitely lost the 20, all right? And a lot of things are kind of actually pointing to almost a sub 4,200, right? This thing's $4, this thing being the 100 moving average if you're looking at the box. It's a couple dollars below 4,200, right? So and again, look, MACD is looking ugly and it looks like it wants to head to the negative. This RSI is still going down. We're only in the 40s. This thing can still go down on the weekly, right? So throw in a government shutdown and things can get scary. That's for sure. Look, coming to SPY, the S&P 500 ETF, it's basically moving a digit, right? This costs $425 a share. SPX, which is the actual S&P 500, is basically, you know, move a digit, give or take, right? So SPY, the one thing I want to just stress is this is a mirror image, right? We have that same little horizontal I was talking about. You can see I made a line roughly on the same place. We are below 4 of the 5. And literally, as I just move between the two, I'm not zooming in, I'm not zooming out. They are mirror images of each other, right? So still negative, still in the low 24s, still a lot of reason for me to believe this is coming to 420 instead of the 4,200 that I said over there, right? Again, looking at the weekly, we were doing beautifully riding up, had a bounce right there. Same bad couple candles. Again, this is two completely different tickers, SPX and SPY. They are literally mirror images of each other except the moving of decimals roughly, right? So the one thing I like to do is just make sure there are no random anomalies when I'm looking at the indice itself and then the ETF equivalent, right? But yeah, there are reasons to be scared. All right. When a major indice does bad, so do most individual tickers. All right. And one more time, I know the cool thing to do is say, hey, I'm better than the fear. I know the cool thing to do is say, hey, I'm not worried about a scared market. Let it come to me. Nah, man. Don't underestimate how bad things can be when the market is bad. And when people talk about the market, they're talking about these three indices, the S&P 500, the NASDAQ, and the Dow. Look, there's obviously the Russell, there's a couple other ones. These are the big three. All right, so that is my SPX, SPY, SP500 coverage. Let me know if you disagree or think otherwise. Otherwise, let's come into NASDAQ, all right? How crazy is it that NASDAQ actually almost looks mirrored to the SP 500? All right. This is, look, this is NASDAQ right here. You're looking at NASDAQ Composite 13,000. These moving averages should look, I mean, look at the numbers down here, right? Like that's NASDAQ, that's SPX. They are actually almost mirror, which is not crazy, right? What it actually does is emphasize the fact that the moving averages, like the indices mirror each other. You know, it's hard for one to do something and the other two to not follow. All right. And yeah, I'm basically going to be repeating a lot of the words that I just said in the last few minutes, and I'm not really trying to do that right now, right? So we are under 4 of the 5 moving averages. There's a lot of reason to believe we're going to come down to this 5th one. There's actually not a substantial horizontal plateau. There's maybe this, but nothing substantial. Like there is a lot of reason to believe that green might be a hard red. Okay. And dude, again, the RSI is low, but man, this is a scary channel to be trading in. And basically the channel is from this line to here, the 200 moving average, roughly. Man, this is rough. This one is rough. The one thing to maybe hope for is, look, you sometimes fall real far below the 8 and sometimes go back to it. Maybe we do like some sort of little baby recovery that kind of takes us up to like 13.3, 13.4-ish. End of the day, I think there's a lot of bad happening here. And man, it actually wasn't that long ago. We were on an RSI of 15 here. It was actually like less than a month ago, give or take. Listen, there is no tech stock that's better than the NASDAQ. Okay, when NASDAQ looks like this, even the almighty NVIDIA, all right, NVIDIA is actually holding the 100 better, and dude, so much power to it. But when NASDAQ has already given it up and has already given so many confirmation candles after it, you know, tech is gonna hurt because of NASDAQ. All right. Let's look at QQQ. And again, the main reason I'm looking at QQQ is to see basically the same thing. We're a few days under the 100. We've still got the same bad RSI, same negative MACD, same hard fall drop to the 200 if it happens, same basic green, red. Like there's not a lot of difference. What's the weekly look like right here? All right, let's see. What's the weekly look like right here? It's pretty similar. It is. It's not as NASDAQ's a little tighter is I think what the word is. But yeah, I mean, that's kind of the same structure, right? And let's talk about it real quick. Where are we? We have slipped below the 8 and the 20, and it seems like we're confirming. A lot of reason to believe we're coming here. And truth be told, we're probably going to slip that and come down here. Maybe I'm being a little too cavalier, just quickly dismissing this very, very important moving average on the weekly. Maybe I am being a little cavalier, but I think there's a lot of reason to believe 12,250. 12,250 is kind of the number. Where are you right here? All right, you're at 12.5. Is that actually what this number is at? 12.7. All right, yeah, maybe I'm being a little too cavalier. Maybe the 100 moving average can save it. And when I say save it, I don't mean hit this and bounce back up. Like I think we're gonna see a little bit of pain. Hopefully, like I said, right, during this whole thing down, we had a couple of decent weeks before we kept going down, until we finally changed the trend and went, right? So I'm looking more for a couple weeks of breathing versus sincere recovery, sincere breaking moving averages and getting back over, right? So And then just really quickly, let me, I guess, just touch on the DJ30, the Dow Jones, all right? DJ30. DJ30, unlike the other two, is actually below all five, okay? And again, excuse me, a little hiccup there. I don't know if that's indicative that the other two are going to lose the 100 and fall their way all the way down, all right? I don't know if it's indicative that they're actually going to also go below them all. Again, just there's a lot of reason to be worried. What does the DJIA... Yeah. This is the Dow 30 ETF. Is this what I want to show? No. DIA. I think I want to show the DIA. That's what I would rather show. The DIA is the Dow Jones Industrial ETF. That's actually a lot closer to mirror. Again, this one costs $336. The DJ30, the Dow Jones Industrial, basically same thing, just a couple decimals moved, right? So the DIA looks very similar. DIA is under it by, it's just, there are reasons to be worried. The cool thing to do is say, I'm not worried. The smart thing to do might be to accept the worry and just move on the sides until things recover, all right? Let me know your thoughts and opinions. Otherwise, as always, I appreciate you so much. Thank you.